Hey, welcome back to Consulting with Ronald Raymond, the podcast. And excuse the technical difficulties. Excuse the technical difficulties. So, episode part one rather did get cut short. But thank you for finding episode two or part two rather, and we still look forward to just continuing our conversation. So, for those who don't know, we do have Mr. Tyler Coleman. He is the owner of Votre Health and Life Benefits. So, please, if you have not heard part one, go back, stop right now, go back to part one, listen to part one first, because you don't want to miss the introduction and just some key points that was brought up by myself and Tyler. So and then now, if you have already heard episode or part one, then welcome to part two. So we're gonna start where we left off. So the question that we left off on, Tyler, was, we're talking about the difference between, we had just talked about term and whole life insurance policy. So, can you talk to us about what are one or two types of insurance that become increasingly important if someone is trying to build wealth or even start a family?
Right. So I'll stick with one, and I don't want you to think I'm just being biased, but I have to go back to cash value whole life insurance again because the reason I say that wealthy families use cash value life insurance, especially cash value whole life insurance, to build wealth and to retain it. And cash value whole life, it has other capabilities as well because not only does it build cash value, and it provides a death benefit from the family, but you can take policy loans from it. So
Right.
here's an example. Think about like when you need a car, right? So I remember when I needed to get a new car for myself, I had to go to the credit union in order to get a loan for it. But if you have a life insurance policy in place, let's say you have $30,000 built up in cash value, instead of having to go to the bank or a credit union to get the loan and then get the loan approved, right?
Mhm.
Instead, what you can do is take money from your life insurance policy and fund the payment for the car. Now you're your own bank, and instead of having to worry about a car note, you can pay yourself back through your own policy. So you don't have to worry about interest rates that you've borrowed from with the bank or the credit union. You'll still have to pay interest. You're still required when you take policy loans from an insurance company. You're still required to, well, I wouldn't say required, but it's in your best interest to pay back the loan, right?
Yeah.
But you're required to pay back only the interest on the loan each year and not the full loan. So that's another benefit when it comes to taking policy loans from an insurance company. So again, that's why I say that I think cash value life insurance is simply a tool that's underlooked and it's underrated as a savings tool and a way that you can build wealth because sometimes what you'll find too is that real estate investors that have cash value life insurance policies, what they'll do is they will borrow the cash value, right? They'll borrow against the policy
Hmm.
and then use that money to fund a real estate deal instead of having to go to the bank to get a loan approved.
Hmm.
I think that cash value whole life, it's a it's a tool that really helps you to become your own bank and it empowers you with financial building strategies as well. So what I would recommend for people if you're interested in considering a cash value whole life insurance policy, there's a book written by Stephen Parisi. Now, I've never met this guy before. I don't know him. He doesn't know me. We've never met in person, but it's called Whole Life Insurance: Unlocking the Secrets About Cash Value, and it's a very well written book. It teaches you how banks and corporations use cash value whole life, and then how you as an individual, like myself and you can use it as well. So that's what I would recommend people if they're recommends people if they're considering using a cash value whole life insurance policy or opening one for themselves or putting one on their spouse or their children.
Yeah.
It's that's a good read. It's very informative.
And something that you mentioned in part one, you kind of talked about the stages in life that you would say, hey, well, you may want to do term, or hey, let's get this, this whole life insurance, because you mentioned term is more of a rental
Hmm.
in episode one or part one, and then you said whole life insurance is more ownership. So in what stage is, talking about the cash value life insurance, what stage of life would you suggest someone doing investing in this, so to speak?
Well, I would say it would definitely be a good idea if you're someone that doesn't have. Well, you know what? Let me backtrack because with this type of insurance, your mindset on money has to be different
Mm,
because
are you talking my language now? Yeah.
right, right, because your money with your mental process on money has to be different because most individuals they may not want to do cash value life insurance
Hmm.
because they may think, as we mentioned before, it's a scam. It sounds too good to be true. I get to put money somewhere where it can grow, and if there's a market downturn, it doesn't lose. I don't lose any money.
Yeah.
So I think first, what we have to do is look at the person's mindset towards money because you have people in different stages of their life where they'll take out a policy when they're young. You have individuals that are older where they'll take out a policy. But going back to what we were talking about earlier, the insurance agent that I was referencing, he mentioned that it's a good idea if you're someone that's trying to really uh, keep your if you have a lot of bills, right, and you're trying to really budget your money, it may be a good idea to consider term because especially if you have kids and other types of responsibility, term or convertible term could be a good option. So I wouldn't say that you have to look at the stage of life, but you have to look at the person's mindset towards money and what financial responsibilities that they currently have in place.
Okay, that's a good point. That's a good point. And man, I love what you said about the mindset, because my moniker is, break the habit, break the cycle. And that entire moniker is really just
Right.
talking about the mindset. It's really the mindset has to change about money. So and that
Because
usually happens when someone, as you mentioned, is, starting to have the mindset of like trying to build generational wealth.
Mhm.
These type of program sounds like it'd be really good for someone. So going into we're going to talk a little bit about fixed index annuities, because a lot these come up quite a bit, quite a bit. I dealt with these quite a bit at the bank as well. So could you explain to the audience, what a fixed index annuity is, and then um and for what type of financial what sorry, excuse me, what type of individual you might refer this to?
right. So this is something that we're thinking about. We're starting to get into retirement planning now, right?
Hmm.
So what a fixed index annuity is an insurance contract that's designed to provide you with income during retirement. So let me ask you this question, said I don't mean to put you on the spot like
All good, all
with
good.
each, but let's fast forward 40 years into the future, right?
Hmm.
Now, what would be your main concern? Would it be dying or outliving your retirement income?
For me and my mindset, would
Uh-huh.
be you know, dying.
Dying. Okay.
I'm
Oh,
just kidding.
I got you.
Yeah, no, no, but yeah, but no, no, seriously, seriously, outliving my retirement income. That would be a big issue.
Right. And believe it or not, a lot of seniors, what you'll find if you ask them that, they're more concerned about outliving their retirement income. And
Mhm.
that's a valid concern to have.
Yeah,
So what annuities are designed to do, they're designed to make sure that you don't outlive your retirement income. And what I want people to understand is with your retirement income, we're not trying to beat the market. What we're trying to do is safeguard you not running out of money as you get older, right?
hmm
And I honestly feel said that when it comes to retirement income planning, it's more of a woman's issue if you think about it, because wives, right? They generally outlive their husbands.
hmm
So if there's no retirement plan in place, let's say once the husband passes away, that's one income that's not coming in the house anymore, and the wife is left with everything else. And then, and to make matters worse, I mean, if there's no life insurance in place for the husband,
Well,
that's going to further exaggerate the situation.
yeah,
So, I think retirement income planning is definitely a conversation that needs to be had. And fixed index annuities, they can definitely be an effective tool to prevent a person from outliving their retirement income.
yeah, yeah, and absolutely right. This is something that, dealt with a lot in my career as well, was having those same detailed conversations of explaining to people why, this fixed index annuity was a good fit for them. And just to even kind of go into a little bit of, when COVID hit,
Hmm.
a lot of my clients that did get, locked into some of these annuities that we had for them, where there were some, a lot of times some fixed rates for, 5 years, maybe 7 years. Um, they didn't take a huge hit like a lot of people did. They didn't take a lot. I had a lot of clients that, came to me whether they just had some CDs that their rate was affected on, or they were in the market and they lost tons of money. But people who were inside of these fixed index annuities, I mean, they held on strong. So go ahead.
And so I'm glad you mentioned that because I noticed you said the ones that were in the annuities didn't really take much of a hit. Do you know why that is?
Well, you about to tell me.
Okay. Right. So with fixed index annuities in particular, they are tied to the performance of a stock index, right? A stock market index like the S&P 500,
Hmm
but they're not directly in the market,
hmm
so to speak. So if the market has a downturn, you're not going to lose any money because not to overcomplicate things, but there's a 0% floor, and that ensures that you won't lose any of your principal.
Yep.
That's why fixed index annuities are an effective tool of protecting your retirement income as well. Because if the market does good, then the policy is going to do good. But if the market has a downturn, then you're not going to lose any of your money.
Absolutely. Yep. Yep. And that was
Right.
a strong selling point. Because of the conversation around annuity, especially dating back to even 2008 specifically, where, market really, really took a big
Right.
hit for a lot of people. So a lot of people still have a bad taste. I ran into a lot of clients that had a bad taste as soon as they heard the word annuity. They completely, oh, don't talk to me about that,
Right.
but change the mind. We're talking about changing the mindset, right? Like breaking the habit, and really developing a different mindset, because these these products can really, really help, of various amounts of different clients at different, as you mentioned, different stages of their life, depending on where they are. So we're going to go into another topic, something that you really specialize in as well, and that is Medicare, right?
Mhm.
So just to because I know I don't, once again, that's why I have you here because I don't, that's not my forte, right? Not my wheelhouse. So that's why I want to lean on you. And I think the listeners, the viewers, they'll really appreciate, you giving us a breakdown. So given your specialization in that, of course, we know as people age and they approach retirement, these things are very important for them to have. But if you can just kind of break down and just give people just a breakdown of what Medicare is and why they're important.
Mhm. So simply, Medicare is health insurance and it's generally going to be for people that are 65 and older. Sometimes if you have certain disabilities, you can qualify still for Medicare, even if you're under 65, but generally it's for individuals that are 65 and older. Now, in my career, I've had a lot of seniors tell me, "Hey, Tyler, this Medicare is confusing. I don't get it. I really need some help." And that's understandable because a lot of the language that's used in the industry, it can be confusing even among agents sometimes. But here's what I want people to focus on. Now, Medicare, it has four parts. Now, you have Medicare Part A, right? So when you hear Medicare Part A, think that's my hospital insurance. So this is covering me when I go into the hospital, if I have to have skilled nurse facility care, things like that.
Yeah. Hey, viewers,
Now,
write this down. Y'all write this down. Yeah, write this down. Okay, go ahead. Hospital.
right.
All right.
And then Medicare Part B, this is the medical insurance. So this is the insurance where it's going to be used when I have doctor office visits or services performed at the doctor. Now, Medicare Parts A and B, they both form original Medicare. So original Medicare, it covers you for 80%, and the Medicare beneficiary is responsible for 20% coinsurance.
Hmm.
Now, Medicare Part C is what's known as Medicare Advantage plans. And what Medicare Advantage plans are, these are private insurance that's offered by private companies, and they have to get approved by Medicare. So Medicare Advantage plans, they are legally required to offer the same type of coverage. They have to offer the same coverage that original Medicare offers. And in order to get a Medicare Part C plan, you have to have Medicare Parts A and B.
Mm.
Now, an individual may ask, well, if I already have Medicare Parts A and B, why do I need Medicare Part C? Well, because again, keep in mind, original Medicare, it covers 80%, and the Medicare beneficiary is responsible for 20% coinsurance. So, what Medicare Advantage plans do is they help fill in some of those gaps to limit that 20% coinsurance exposure to the point where instead of having a 20% coinsurance bill, you have a copay at the doctor instead.
Yeah.
For example, like a $30 copay if you go see a specialist instead of having to pay 20% coinsurance.
Hmm.
Now, another reason why individuals may opt for a Medicare Advantage plan is because they offer additional benefits that Medicare doesn't cover. For example, such as routine vision, dental, and hearing benefits. And people do find those services as valuable coverage in a Medicare Advantage plan since it's not offered through original Medicare. So that's a reason why individuals will choose a Medicare Advantage plan because of the comprehensive coverage that it offers. And then another feature that it has as well is you'll find that most Medicare Advantage plans they include prescription drug coverage as well. And they can be offered at a $0 premium. So you're getting medical coverage, prescription drug coverage, dental, routine dental, vision, and hearing, and over-the-counter benefits too, all into one plan at a $0 premium. That's what you can find on most plans. Some plans you'll find that they do have a premium, but generally most plans offer all of that for a $0 premium. Now, again, that's Medicare Part C, Medicare Advantage plans.
Mm-hmm.
Now, Part D, this is just your prescription drug coverage, right?
Okay.
This is, yeah, that covers the cost of your prescription drugs and vaccines, and you can get that through a standalone prescription drug plan. And sometimes what happens, it depends on a person's situation because an individual, they may choose to stay on original Medicare and just get a standalone prescription drug plan instead of getting a Medicare Advantage plan, which is Part C. So again, it all involves looking at a person's situation, looking at what type of coverage they want to see what would be the best option for them.
Mm-hmm. Okay.
Mhm.
So you mentioned the different parts, right? A, B, C,
Mhm.
D. Um, break down or not break down, but just for people to just write this down and take notes. Give them the difference. What are A, B, C, and D? What are those again? Tell the people that one more time.
So Medicare Part A, that's your hospital insurance. Medicare Part B is your medical insurance. Part C are Medicare Advantage plans. And Part D is prescription drug coverage.
Okay. And let me give you a scenario
Mm.
if that's cool. So let's say someone who is having a medical situation, they had to need to have a knee replacement, right? Um, how will these things work together? Like A, B, C, D, how does that coincide with each other, if
Okay.
possible?
So let's say that this individual is on a Medicare Advantage plan. So remember, in order to have a Medicare Advantage plan, which is Part C, you have to have Medicare Parts A and
A
B.
and B. That's right. That's right.
They would have Medicare Parts A and B, and it would show on a red, white, and blue Medicare card. Now, what some individuals do is they get a Medicare Advantage plan, right? So that Medicare Advantage plan is designed to limit their exposure to that 20% coinsurance. So what was that service you were saying? Uh, what type of surgery?
Oh, like a knee replacement or something like
Like a
that.
knee
Yeah.
replacement. So a knee replacement done at an outpatient facility. So if they were to get that procedure done, it's treated as an outpatient surgery. They could be looking at a copay of around, I'm just throwing a general just number out there. They could be looking at a copay of $300.
Yeah.
But if they just had original Medicare, just Medicare Parts A and B, what would they have to pay? They would be responsible for 20% coinsurance.
Hmm.
So you don't know with that type of bill
Yeah.
how much 20% is going to be.
Outrageous.
So
Yeah.
a Medicare Advantage plan, it can offer pretty much like a set limit or some type of predictability, knowing what you're going to pay for a surgery or a service that gets done.
Okay. And then it sounds like, especially like someone who, in this instance, we're talking about Medicare. So this person, you know, they're on at this point probably a fixed income, fixed retirement income. So it sounds like it's very important to have that because, as you mentioned, 20%, of a actual, surgery. I mean, that number could be insane. So
You don't know with that. And I'm glad you mentioned that, said fixed, being on a fixed income, because if you don't mind, I'll mention this as well.
yeah.
You have a lot of seniors out there that aren't aware that they qualify for government programs.
Mm,
So what I'm talking about is things like your Medicare savings programs, your LIS. And what LIS does is it stands for low income subsidy. It's also known as extra help. And basically it lowers the cost dramatically of your prescription drugs that you take. And then another government program that I just mentioned, talking about Medicaid. a lot of people qualify for Medicaid and they're not aware that they qualify for Medicaid. And what happens is when a person has both Medicare and Medicaid, they even qualify for more benefits on Medicare Advantage plans that they wouldn't get originally. And their co-pays would be a lot lower as well, or even just $0.
Wow. Yeah, I mean, hey, guys, please write this stuff down. This is really good information. Once again, I mean, you're lighting me up with stuff that, I was really unaware of. So, no, I appreciate that. That's actually really valuable information because as you mentioned, I mean, there are a lot of people I meant I can't even tell you how many times I heard I'm on a fixed income. I can't afford that, or I can't, yeah, I can
Right.
barely pay for my medicine. So that is some great information. So outside of like some of the basic components, like talking about Medicare, outside of some of the basics, that we kind of talked about, what are
Mhm.
some challenges or that a lot of people may face when they're kind of navigating through these things, or and what is something that with your expertise would say, hey, you need to really avoid making a mistake doing this.
Right. So I would say a major challenge is figuring out what plan covers what. So if you're dealing with a if I'm dealing with a client who has doctors that need to be covered, prescription drug medications that need to be covered, sometimes, a lot of times, seniors, when they're trying to do it by themselves, they don't know what plan is going to cover what. So that challenge is very it's a huge obstacle when it comes to selecting the proper Medicare Advantage plan. And what I would advise people to do is, again, it could help a lot if you speak with a licensed insurance advisor like myself that specializes in Medicare to help you to select the right plan that fits your needs. Because sometimes what happens is, and I understand, and this I'm not trying to pick fun at anybody, but you let's say you have a group of seniors um, just having coffee,
Yeah.
and they start talking about the plans that they're on, and one say, "Hey, I'm on this plan. I really like it." And the others say, "Yeah, I like that plan. My sister told me about this plan that works for her." Well, just because that plan works for your friend and that plan works for this other person, that doesn't necessarily mean that that plan is going to work for you. Because sometimes with individuals, Medicare Advantage may be the best route to go, or Medicare Supplement may be the best route to go. And I know we haven't talked about that, but Medicare Supplement, or what's also known as Medigap, that is a policy where you will pay a premium each month, right?
Mm-hmm.
But the reason why some individuals may choose a Medicare Supplement is because of the predictability of it. So I'll give you a scenario of an individual that I would recommend a Medicare supplement for. Let's say you're someone, and I know we're you asked me about something else. I don't mean
Uh,
to get on a different
all good. No, we,
uh
we appreciate the information. This is good information.
right. So with Medicare supplements, if you're someone who goes to the doctor a lot, you have to have multiple appointments on a frequent basis. I would probably recommend that you join a Medicare supplement policy,
Mm-hmm.
because what I just mentioned with Medicare supplements, you're paying a premium each month, and generally let's just say that the premium for a Plan G Medicare supplement is $150. You're paying that each month, but when you go to the doctor, you won't be paying any copays because you're paying that premium each month. So I'll give you a real life example of this. I remember I was dealing with a client who, and I guess this kind of answers your original question a little bit,
Mm-hmm.
but I was dealing with a client who was on a Medicare supplement, and they had a prescription drug plan to go with it, and they were just concerned about of having to like keep paying the Medicare supplement premium, and they wanted to know more about a Medicare Advantage plan. So what I did was I just did a thorough needs analysis. I looked at all of the doctors that they had, all of the prescription medications that they take, and all in all, at the end of the day, what we decided to do, I said, hey, look, I would love to have you as a client, but due to your high use of medical services, the fact that you do have to go to the doctor on a frequent basis, it will probably be best if you stay on your Medicare supplement policy, because if you join a Medicare Advantage plan, those co-pays on Medicare Advantage plan are going to eat into your wallet, and that's going to put you in a bad position. So I kind of say, say all that just to say this: you have to make sure that the plan that you have is the right plan for you and not what works for someone else. Because a person, they may need a Medicare supplement, but you might need a Medicare Advantage and vice versa.
Yeah. No, and this is I mean I love this information too because one of the things that when I'm working with someone, I'm working with a partner, you mentioned sometimes a lot of people are trying to fill their pockets, right? You know, but instead sometimes you always need to do what's best for the client. And
Right.
everybody's situation is completely different. And the only way you have to talk to someone. You need to talk to a specialist. You need to see and explain, hey, this is my situation. What do you think? What do you think would be best for me? And then that's the best thing. So I appreciate that information. So how often would you say someone needs to review like this their overall insurance policies? Like how often would you say that someone needs to take a look at that and talk with a specialist? Or what are some things that could possibly trigger an immediate check-in? What do you think?
All right, so I would say definitely check in on it every year. Like for example, with going back to Medicare, what Medicare Advantage plans do is they send out what's known as an ANOC document, or which stands for Annual Notice of Change. And what this document does is it lets you know the changes that are going to happen on your plan for next year. And I tell my clients, make sure that you review that document, because if there are certain changes that you're not going to like,
Yeah.
then we may need to look at what could be a possibility for next year. So I would say with life insurance, your health insurance, whether you're under 65, over 65, it's definitely a good idea to assess that every year. With Medicare, we have the annual enrollment period coming up, which lasts from October 15th through December 17th. So if you're someone that's on a Medicare Advantage plan or a Medicare supplement, it's definitely a good idea to assess your options during that time.
So once a year, you would say
Hmm.
taking a look at it. Okay. So people, if you have not talked to someone in a while, time to do it. Check in. I mean, because I do think that's super important. So I guess what's the single more most important thing that you or action important action step someone listening today to this podcast can take to ensure that they have adequate protection insurance for their current life stage.
Again, meet with a licensed professional. That way, that professional can assess your situation, do a thorough needs analysis. And I'm talking about life and health insurance, or even with the policies that you may have through property and casualty insurance as well, like auto and home. Really meet with a professional that knows what they're doing, because they can do a thorough needs analysis to assess if your policy is up to par with the needs that you have for right now.
That's awesome. That's awesome. And And lastly, we're gonna get ready to wrap it up and get you out of here. So, but to help our listeners truly break the habit, break the cycle of being underinsured or even just confused about their coverages, what is your ultimate piece of advice regarding insurance and financial planning?
Okay, so you have to be proactive about insurance. because we can't talk about building generational wealth if insurance, especially life insurance, isn't a part of our financial plan and comprehensive planning.
Mhm. Say that one more time.
Yeah, so definitely be proactive about insurance because you can't talk about or you can't start to talk about building generational wealth if life insurance isn't a part of your financial plan.
Generational wealth, and that's one thing that I talk about a lot with my clients is that's the whole point of what we're looking to do, right? We're trying to help people break certain habits and really help themselves to build, generational wealth. So, Tyler, man, we appreciate you coming on once again. Can you tell the people where to find you for the people that are listening?
Right, so I have a Facebook and an Instagram, Votre Health and Life Benefits, and I'm also on TikTok, Tyler the Insurance Advisor, and LinkedIn as well, just as Tyler Coleman.
Okay, okay,
Yeah.
awesome, awesome. And we appreciate you, man. Once again, this is consulting with Ronald Raymond, and my name is Cedric Deloach. This is Tyler Coleman. We appreciate you guys listening. If you have any questions, as Tyler mentioned, please find us, reach out. We appreciate you guys. Thanks, Tyler.
All right, thank you.